Bitcoin, a digital gold mine, or a volatile gamble? The answer may surprise you. At its heart, Bitcoin is a scarce resource, much like gold. This scarcity, combined with its decentralized nature, gives Bitcoin its value. What sets it apart, though, is its potential for substantial returns. A single investment today could yield a significant profit tomorrow. But it's not all sunshine and rainbows. Bitcoin is known for its volatility. It's a roller coaster ride of unpredictable price swings that can send investors on a wild, heart-thumping journey. One moment you're on top of the world, and the next you're plunging into the depths of despair. This volatility is part and parcel of Bitcoin's identity. But is there a way to predict when these price swings might happen? The answer lies in the Bitcoin halving. Bitcoin halving, a term that confounds many. But let's break it down. Imagine a gold mine where the amount of gold you can mine is cut in half every 4 years. That's essentially what Bitcoin halving is. To understand this, we first need to understand how Bitcoin is created. Bitcoins are generated every time a block of transactions is added to the blockchain, which is essentially a public ledger of all Bitcoin transactions. This process is known as mining. But here's the catch. The reward for mining new blocks is not constant. It's pre-programmed to decrease by 50% approximately every 4 years. This event is known as Bitcoin halving. The first halving occurred in 2012, reducing the mining reward from 50 to 25 Bitcoins. The second and third halvings occurred in 2016 and 2020, further reducing the reward to 12.5 and then 6.25 Bitcoins respectively. So why does Bitcoin halving happen? It's a mechanism designed to control the supply of Bitcoins. By reducing the rate at which new Bitcoins are created, Bitcoin halving slows down Bitcoin inflation. It ensures that the total number of Bitcoins in circulation will never exceed 21 million, making Bitcoin a deflationary currency. So, Bitcoin halving affects the supply of Bitcoin. But what does this mean for investors? The impact of Bitcoin halving on investors can be monumental. As we plunge deeper into this digital frontier, it's crucial to understand how certain events like Bitcoin halving can shape the landscape of cryptocurrency investment. So what exactly does Bitcoin halving mean for you as an investor? Well, for starters, this event directly affects Bitcoin's supply. By halving the number of new Bitcoins generated and consequently introduced into the economy, the event essentially cuts the supply growth in half. Now, if we dust off our old economics textbooks, we remember that when supply decreases while demand stays the same, the price should, in theory, rise. This is a fundamental concept that can be applied to Bitcoin as well. If the demand for Bitcoin remains high, yet the supply is reduced due to halving, it's possible that the value of Bitcoin will increase. Now, let's take a quick stroll down memory lane. Historically speaking, the price of Bitcoin has surged following halving events. After the first halving in 2012, the price of Bitcoin increased significantly. A similar trend was observed following the second halving in 2016 and the third in 2020. However, and this is important, we need to remember that past performance is not indicative of future results. While the history of Bitcoin's price behavior post-halving might paint an attractive picture, the world of cryptocurrency is anything but predictable. Bitcoin is known for its volatility, with prices that can skyrocket one day and plummet the next. Investing in Bitcoin, like investing in any other asset, carries risk. The value of Bitcoin can be influenced by a variety of factors, including global economic trends, technological advancements, regulatory developments, and market sentiment, among others. As such, it's essential for investors to do their homework. Understanding the mechanics of Bitcoin, the implications of halving, and the overall market trends can help investors make informed decisions. Bitcoin halving is a pivotal event that can significantly influence Bitcoin's value. As an investor, understanding this event could give you a competitive edge in the volatile world of Bitcoin investing. But remember, while the potential rewards are high, so too are the risks. So, tread carefully, ask questions, do your research, and never invest more than you can afford to lose. The world of Bitcoin is a wild ride, but with careful navigation, it can also be an exciting journey.